Big news out of Ottawa today. The Bank of Canada has reduced its policy rate by 50 basis points. What does this mean for you as a buyer, seller, or investor in real estate? Well, I'm here to break it down so that you can stay ahead of the curve. Whether you're actually looking to buy, sell, or invest, this policy rate change will make an impact across all sectors: residential, commercial, investments, and even agriculture. Let me explain why. Before we get to the why, let's talk about the reasons that they dropped the rate. Primarily, they did it to spur economic growth. They now have a policy rate of 3.75%. This comes after a massive drop in inflation from 2.7% to 1.6 today. Now, this response is also due to a few other factors, including a soft labor market, declining shelter costs, and I also think because of the fact that so much new development has come off the production lines, even though wages are still high compared to where our productivity sits today as a nation. Now, globally, we're seeing some interesting shifts. The US seems to have great growth with an impending election. It's going to be very interesting to see where that trajectory goes. Europe seems to be in a bit of a softening pattern, and China is still sluggish. And I do think the financial markets across North America are going to see a softening in interest rates as well. Now, what does this mean for the residential housing market? Well, with the bank indicating that they're going to return to a GDP of about 2.6 plus by 2026, I think you're going to see a return of consumer confidence. It's already been there in the residential resale market, and you're seeing that in bidding wars happening on properties that are sharply priced. You're also seeing inventory that's been sitting around for a while doing cuts on their prices of hundreds of thousands of dollars just to get in range and clear the cobwebs. On the new construction front and the luxury front, I still think there are incredible deals to be had because it's just not as busy as the resale slash renovation market. But I think people are getting sick of renovating kitchens and bathrooms and having to live through stuff. And you're going to see a closing of the gap of that new build or luxury product being within range of somebody saying, you know what, I think there's more value in just buying new. And builders are willing to roll out deals right now. We have incredible sites all across Southwestern Ontario with Wasco, with Domus. We only have 2 units left in Port Stanley. We have Halcyon Homes in Lambeth that they build an incredible product and they are looking for the right fit clients. So if you're searching for a new or luxury home, now's probably a time where you're going to get a better deal with some of those builders than I would say by late 2025. Now, I want to touch on the commercial and the investment and the agricultural markets. We do what's called focused diversification because the farmer that is selling the multi-generational farm close to the urban growth boundary sells it to a developer. Quite often what you'll see is a large commercial institution set up roots in a place like Elgin County, Volkswagen, or Amazon. And guess what? With all the new jobs and all the new logistics, you're going to see a quick turnaround of developers looking for properties that they can buy to be around that growth. And then once you have the population base, guess what? The retail comes, the Starbucks comes, the rental towers come, and that's how cities grow. Now, the farmers have a big role to play in this because we have more Class A agricultural land in Southwestern Ontario than almost anywhere on the planet, but a lot of that land is now being put into urban growth boundaries. So developers are targeting sites that could potentially be developed in the future while trying to protect our natural reserve of farmland, which I think is incredibly important. Now, that's a discussion for another day on how we look at those sites and how we look at pre-development planning with our new dev team. For today, I'm going to stick to the fact that the rate drop is going to affect all asset classes and all consumers' confidence in the market, regardless if you're looking at residential, commercial, or investing. Investors have been sitting on the sidelines for quite a while because the deals don't pencil, but savvy investors are throwing in offers to see where people's motivation is. So if you're a buyer, seller, or investor, the question I would have for you is, are you looking to invest in this market? Jump in the comments and let me know. We love giving you the information and try to empower you to make decisions local to your area. If you're looking for an agent anywhere on the planet, also let us know. We have an amazing network of people. If you're also looking to invest anywhere across North America, let us know. We'll connect you with one of our prime partners. Obviously, if you're looking in Southwestern Ontario, the London, Ontario greater region, including Grand Bend, Port Stanley, Bayfield, St. Thomas, Strathroy, and everywhere from pretty much Kitchener to Sarnia, Lake Erie to Lake Huron. We are your team. Would love to connect with you and see if we can help. But hope you enjoyed the update and let me know your thoughts in the comments.